Market conditions majority bullish, 14-0 here on SP futures. Flat this morning, down 0.02. Continuing to see this overall expansion and trend. We've got a Fed day today where more than likely they're going to lower interest rates by a quarter basis points. That is the consensus. We are continuing to see some weakness here in the breadth. Majority bearish on this indicator, back down to 50%. So we got 50% of stocks in the S&P 500 trading above the 50-day moving average and 50% trading below it. So there, we'll see which direction ends up taking control. We're seeing a shift here on the weekly time frame as well. That could be, it's interesting nonetheless when we start to get some divergence in price activity and some of the other internals. We're seeing VIX holding relatively steady, but starting to climb right here, 16. Now shifting. Yesterday it was at 12 and 2, I believe. So we've shifted now to 9 and 5 with yesterday and today's market activity. Be aware of that. We're certainly at ranges when we're this expanded. The probability of us continuing up really high, there could certainly be some kind of an exuberant move higher, but we're just not seeing that broad-based participation. Also starting to see a little bit of fear come back in. It simply just means put buying. You're getting more and more put buying. It's the VIX is the extrinsic value of the S&P 500 options in essence, and so as that extrinsic value increases, as it's widening, you're seeing that start to move, and that means that put options are being bid. You're getting buyers of put options which are protecting the downside or being able to profit from the downside, and so you're starting to see that starting to move back up again at these levels. S&P 500 closed out yesterday 14-0 on the daily and the weekly time frame. Dow Jones Industrial Average also retracing back down to that breakout point of right where we're at, that 458 range. Triple Qs also majority bullish. Everything's majority bullish across the board. A lot of this feels like it's been waiting for today, although markets are already pricing in what they know. If there's some kind of surprise and the Fed goes down 50 basis points instead of 25, then we could see a massive spike higher. At the same time, if they were to do that, that may mean that they think something worse is happening, which the markets may interpret as bearish. So kind of hard to tell which direction we're ultimately going to go, particularly since we're expanded in this trend. And if we get a retracement, we could afford a little bit of a retracement even back to this breakout point right here and still be in a bullish structure. That's the chart pattern on triple Qs. Russell 2000, we're seeing this also pushing into the supply block and not quite all-time highs yet, but working in that direction. And the upper end of this range, certainly, we'll see if we get any follow through on this today. Also, USO getting a little bit of strength here. We've talked about that 50% retracement, 382 range. It's now broken up above that 382 range. Next stop could be that 78 range for some continuation, running into some overhead supply. It's working its way back towards bullish momentum, starting to see that here. This compression is a decision point. We've yet to see a real expansion of trend. This is what the kind of the choppiness of the trend process, the beginning process. Are we in this trend, retracing, consolidating, trying to decide? There's a tug of war happening here, bulls and bears. Who's going to win? So far, bulls are winning as of today, and we'll see if we get any fall through on USO, which is the ETF for oil. Gold, GLD, also continuing its monumental run to the upside, expanded trend here as well. Retracement range could come all the way back into the 236, which is now 316. So this is dragging that number higher. It's now at the breakout point, and again, still could be, we could get a decent retracement on gold, on the markets. We could get a decent retracement really across the board and still be in a bullish structure, which could be additional buying opportunity for dip buyers. But this gold pattern still is just really trending strongly. Bonds, the 2-year treasury, we're seeing that continue to weaken here, 351 as of right now. Majority bearish on both the daily and the weekly time frame, and the 10-year also holding that majority bearish tone for the 1-year time frame. It's down at 402. Could see that dip under 4% on the 10-year. That would be interesting. We got down to that 390 range back in April, and we're starting to get back to that point here again. A couple stock ideas to consider. I've seen a few names in there, 17 names in that new buy list. You've got STEM, which has got a confirmation bar, not quite back into momentum. One of the issues when the bar doesn't quite get above that is this potential supply right here. You've got sellers that had happened right here. If that could push up just a little bit higher and close up above that, would be a little bit stronger confirmation, but not a bad pattern overall. EVNA, a nice looking setup here. We've got a trade set for that also today. That's a nice looking pattern confirmation bar. And a little bit deeper in the retracement, BBAI. This is BigBear AI. This has been an AI name that's had a lot of volatility. It can certainly run once it does get a new signal. Those signals they're a little bit deeper. Okay, so you now have really big volume trend confirmation on that deeper retracement back to the 618. Let's see if we can grab this swing low point right here, and you can see really nice solid support, demand coming back in, increased volume. This is a little bit of an earlier entry confirmation versus waiting all the way for momentum. We've seen that in quite a few names. So as you're going through that list and watching for some of those, these are also good entry locations because you have a structural way to manage your risk where your stop loss is going to be set, and you have demand. When you get all of this selling that pulls all the way back to these zones, particularly a breakout zone where you're getting some the price moved higher here, it's retested it and proven that demand wants to come back in, that can suck the demand back in here as well, particularly on a big name where they can be volatile. It has to do with AI, and it's a volatile stock from could run from 5 to 9 within this overall price band. So keep an eye on BBAI. That'll do it for today's update. Everyone have a fantastic day today.